Good morning, everyone, and welcome to this report interview with Sensys Gatso. Together with me today, I have Ivo Monnink, the CEO of the group. Ivo, first of all, congratulations to what I think a very solid report. I think the numbers were good, but also the presentation was good as well, and that is, of course, very reconforting. I have a couple of questions here, and I would like to start with your margin development and the expansion we have seen now for quite many quarters. A lot of companies do see margin contraction from mainly the impact of rising costs hurting the margin, while you, on the other hand, seem to be doing really well in terms of margins, and it all goes all the way up to the gross margin. Can you explain to us what have you managed to do in this very, very tough environment where we know that inflation pressures on almost everything is prevalent? What is your magic formula for doing so well in these very difficult circumstances when it comes to costs?
Well, first of all, thank you, Örjan, for inviting me to this interview. And most importantly is that we have long-term contracts with governments, and the pricing of that is fixed. So it's really important for us to control our cost base, which we do. The other thing which is important, that a large part of the margin improvement is actually coming from the growth of our trust business. So the typical trust business, the most of that is actually coming from the United States, and that is a business which the costs are pretty much fixed. And the part that is variable are the cost of the operators. So if the volume goes up and more events, we probably need more operators, and that's the only part that is influencing the margin more or less. So on top of that, what we also do in the US to improve our margin is to focus on what we call our bread and butter, which is the speed and the red light business part of our trust business in the United States, and focusing there on lower costs of maintenance, and we own the business there, but also on increasing the uptime. We make those programs also more efficient, increasing the margins. So the most important impact on our growing margin is basically our growth in the business, in our trust business, mostly in the United States.
So one can conclude that the operational leverage from your trust business now is the key driver, and it's so important that it actually outpacing any inflation pressures you are seeing in your business.
Yes, and on top of that, if you grow your business, your typical fixed structure is not going to be changed that much. So that's also, of course, contributing to the margin improvement. So as we grow our business even further, you could expect margin improvements.
Excellent. You have managed to export the trust model to a new market, Tasmania. Can you share with us how the sales process has been going? How hard has discussions been, and do you feel that your model now is being more accepted in more and more countries?
Yeah, exporting trust outside of the US has always been a strategic priority. We see this initially. We saw this happening in, let's say, developing countries, more likely to happen than in the developed countries, because in developing countries, the investments to pay for the infrastructure are just going to be lower. In Australia, however, which is a developed country, of course, we managed to turn this project around from what initially was a system sales deal by explaining them how we're doing the business in the United States and how successful we are in that country, convincing them that they should go with this model as well. So, and that's, I think, a really good achievement of the Australian team. So what we're doing there is we do everything we do in the United States, meaning we own the equipment, we operate it, and we're using our Cillian back office structure to process the citations. What we don't do in Australia is that we're not sending out the fines and we're not collecting the fines, which is something we do in the United States, but not in Australia yet. That might come, I don't know, but for now we're not doing that. It's been a very professional, intense sales activity by the Australian team that actually got us this very interesting contract.
That's really interesting. So you said it's almost a blueprint copy of the US model that you have now been able to transfer over to Tasmania in this case.
Yes, as I said, apart from sending out the fines and collecting the funds, it's very comparable.
Coming back a little bit on that good margin development we're seeing because you're growing, but you also managed your cost base very well. Do you think that your cost base now is on a kind of normal level, or is it very depressed? And is there a risk of it rising sharply going forward, or do you rather see that the cost is more in line with what you think is the long-term level, given the level of sales you have right now?
Yeah, I mean, to be able to operate in the business in which we're operating in the industry, you need a certain fixed cost base. Otherwise, it's not going to work. For any of our competitors, that will be the same. So we manage that part of our cost base really well. If you grow and we can actually pay on that cost base, we can still grow significantly. So not adding a lot of resources to the fixed cost base. If we would grow, it would be on a variable side of adding costs, mostly operators in the United States. Although also there's possibilities to do more via software to make it more efficiently going forward, of course. So the cost base as such is the one you need and which we control really well, and the volume we can run through that cost base can be much higher than what we currently have running through it.
Interesting. You're talking about critical components that you're well supplied for 2022, which I also think is a quite good achievement compared to a lot of other companies that have really struggled with this. How is the situation for 2023? Do you think that the situation is on a level where you can control it, or do you see massive challenges, or do you see supply chains actually easing? What's your view on the medium-term outlook for components in your business?
Yeah, from what I'm reading is that the capacity of the critical components is ramping up on a global base. Maybe also demand is slowing down a little bit as well, with countries and companies talking about possible recessions coming up. So we work with a certain amount of suppliers we've been working with for a very long time already. So we have a preferred customer position with these suppliers. Also, the numbers are not astronomical in our case, and because we are very good customers to these suppliers with very good payment history, I think we will have a preferred position if the situation would become worse, which, as I said before, I'm not really expecting that. I don't know what you hear from other industries, but what I understand, it might be a little bit easing going forward on the component side of the business.
I would say that is the key message that I'm picking up as well. So it sounds really good. Your cash flow was very, very strong in the second quarter. Was it any what I would call one-offs? I mean, unusually big movements there, or would you more classify the Q2 as normal fluctuations when it comes to the cash flow?
Well, essentially, there is one anomaly in it, which is a cash out, which has been the repayment of nearly 9 million Swedish kronor to the on the vendor loan. So if you would take that out, the cash position would be even better by 9 million. So, and on that note, it really is a milestone for the company, because now with that last payment on the vendor loan, the acquisition has now financially been completed. So that's very positive. Apart from that, no, it is a pretty straightforward quarter from a cash perspective. And obviously, what helps is the good results. You know, high sales, good margins, and therefore high cash in. And at the same time, we also see very good payment behavior of our Saudi customer, extremely good actually. Which also, you know, you remember we invested, these are large contracts, so we invested a lot of money into inventories for this customer. And because of their solid payment behavior, these funds are now coming in. And that's actually showing a very positive cash position at the end of this quarter.
Absolutely. Your balance sheet is now appearing quite strong. And that has been, of course, a challenge for you before. So it's really reconforting to see that you have managed to restore the balance sheet to this level. When it comes to data capture on traffic, could you explain a little bit, how do you view your position when it comes to data quality and the amount of data you are actually accumulating in your business? How could that be used going forward, and how can the business be further developed based on your data inventory?
Yeah, if you talk about using data proactively, we talk about the US market. And we have an installed base there in the US, which is collecting on a daily basis, of course, events. We can use that anonymously, so we can't use the data, you know, linked to a license plate. But even so, with that data, we're able to actually build a model for future customers, which means that if we look at a certain city where we own a contract, let's say Cedar Rapids, and we take the data from that city, then we're able to mirror that situation to a prospect city, if you like, with a similar infrastructure, or more or less similar. If we do that and we combine it with the publicly available crash data for that prospect city, you build a sales case. You build almost like a business case towards the city. And the cities in the US, they are looking actually to implement traffic enforcement, automated traffic enforcement. Sometimes there is some resistance from the general public towards that. But by using data, building this business case, you also build sort of the political public PR case towards the citizens in the city, that how this would actually be beneficial to the community. So that's the way how we're using it. And as I said also in my presentation, it means that you will have to, you know, invest in data analytics, but you also have to invest in salespeople that take these pitches towards prospect cities.
Interesting. If you look at your software platform, do you think that a software platform is never ready? At least that is my experience from being in the software industry for 7 years. But do you think that you have passed the bulk of the major investments in your software platform, or do you foresee that there is a huge need to spend a lot of investments on the platform going forward?
It's good you understand software, because it's absolutely true that software development is a never-ending story, and it should be like that. I mean, it's almost like the updates you will receive on your telephone. It's the same thing, right? So we will have always like a base investment level on our software platforms, and you know, certainly at some point in time there will be a new release, a major release coming out for maybe our Cillian platform, as an example. Flux, however, which is the platform that is the embedded software for the hardware, is close to implementation for a number of use cases, and once we've done that, then the flexibility and the scalability of that platform will allow us to add new cases, new use cases more easily going forward. So that would be exciting to share once we're ready to do so with the market. So answering your question, yeah, there's always going to be maintenance investments, and yes, at some point in time, there will be a major investment needed to upgrade maybe the back office software or the Pulse data analytics software platform to sort of the next level.
I think it's interesting that you have historically been kind of linked to being in emerging markets case with Saudi Arabia, Costa Rica, I think it is, and these kind of countries, while at the same time you have actually tilted the business much more towards the US, Australia, and the Netherlands, etc. So it feels more like you're more into the OECD area, if I may call it so. But what's your view on some of these emerging markets? How are they kind of coming back to investing into traffic surveillance system, or do you think that you will be more geared towards the western part of the world?
Well, at the emerging markets, there's also people driving cars and accidents happening, and in these cities and these countries, the fatality levels are much higher than in the developed world. There's also a lack of capital to invest in the infrastructure, which means that these markets are geared up for the using our TRaaS model, which we use in the United States to some or lesser extent, right? So we're definitely not stepping away from it, but we also know that, and we see that COVID has impacted those markets a little bit more than in the Western world economically. We also see that the impact of the war and the impact that has on food prices and inflation and so forth is also in some of these cases higher than what you would see in the Western world, in the developed world. But answering your question, we're definitely not stepping away from those markets, and Saudi is a good example. We are working towards growing the business there. So definitely and we're working with a very solid governmental authority that is, paying on time and very reliable. So it's a little bit depending on what market you look at, but that's why we do very solid due diligence on those markets. But once we step in, we have a very good feeling about what it is. It's going to be a successful business for us longer term as well.
Okay, interesting. Final question is on the TRaaS business and the share of TRaaS revenues. The 60% you have right now is actually your long-term target. Is this a surprise to you? It's a surprise to me that you have reached this so far. But how do you feel about this? Are you surprised? And what do you think about this level going forward? Do you expect it to increase, or do you think more that the 60%, yeah, that's kind of where you will end up still a few years out?
Yeah, I mean, if you said that a long-term target would be like 1 billion Swedish kronor and 60% of that, say 600 million TRaaS, that is the number to look at. And for me, the 600 million is what we need to really target and look for to achieve. So we are still, we have some way to go to get there, but we're on the right track. So the growth levels are where I would like to see them. I do also believe that growing further in the United States is the key to getting to those numbers. On top of that, entering new markets where there is no traffic enforcement at all, we would, as I explained before, typically do that with the TRaaS model, and that would also significantly add to that top line of 600 million we're looking for. So it's not a surprise. I mean, it's maybe the outcome of a strategic focus. Also internally, people in the company, leadership in the company understands that it is a focus to get to that number, and we're budgeting for that, and we're creating plans for that to be able to reach that.
Excellent. Thanks a lot, Ivo. As I said, I think it's a very impressive quarter. I think it's not only the quarter, it's a trend that you have established now with improving earnings, with improving margins, with good top line growth, and you also landed a very good order intake. I really think that this has been a good achievement, and I wish you all the best for the future.
Well, thank you very much, Arjen, and speak to you later.
This concludes the presentation of the Q2 report for Sensys Gatso. My name is Örjan Rödén. I'm an analyst here at Erik Penser Bank, and please go into Penser Play to look for more videos regarding our coverage.